Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about NZDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing and rejecting a quite strong monthly supply and resistance area. From here, this previous rejection to the upside was created, which confirmed as support this zone, and after that we had the break below that support that made this previous support become resistance here, and was respected as resistance also here, and here just last month when the market tested its zone and immediately started rejecting it to the downside. So the situation that we currently have from a monthly standpoint here on NZDUSD is of a bearish market which is currently rejecting monthly resistance. So in a situation like this, we could expect more potential bearish continuation. Now, a first downside target would be this previous low. That was in fact the level of support that held the market when it was collapsing essentially to this previous low. So there is a good chance that the market might want to go and test this level once again. Therefore, for this month at least, we could expect some more bearish price action to be developed. Going down on the weekly time frame, what do we have? Now, from a weekly standpoint, we have a bit different price action. In fact, we can notice how we do have the creation of this M pattern. And in general, after the creation of an M pattern, what you would expect is a potential move higher for the completion of the M pattern at the neckline, which is the previous support turned resistance. So here on the weekly, we could expect a bit of bullish price action for the market to go and test this previous support turned resistance before then getting rejected to the downside. We can also notice that, generally speaking, as we have an impulse and the start of a correction, if we want to measure the correction, we have to take our Fibonacci from the high to the low of the impulse leg, which shows us how we have a 0.32 Fibonacci retracement lining up exactly with the neckline of the M pattern, which is the previous support turn resistance, creating confluence of resistance, instead of which we could see more potential institutional shorting if the market corrects to it, from which then the leg lower could start. Going down on the daily time frame, what do we have? Now, from a daily perspective, I did speak about NZDUSD a few days ago. After this impulse, I explained all the reasons for which we could expect the correction, and then from here, all this move to the downside, which is in fact exactly what the market just gave us. And by the way, I will link in description that previous analysis, so you can go and check it out for more free education. However, at the moment, from a daily perspective, it is quite clear how the market is about to reach this previous low. If this level will act as support, we will see a rejection to the upside. And if that will happen, we don't know if it will happen, but if it does happen, that would make NZDUSD become very interesting because, as we have already seen on the monthly and weekly, everything looks quite bearish. So if we do get the move to the upside here on the daily, we would also have a daily bearish pattern, which is essentially this W formation. And at that point, that is where we would have very good probabilities of getting a reversal lower for the completion of the W formation at this previous resistance turn support. So we don't know if the market will create this W, but if we get the creation of the W, at that point we have a very good probability of seeing a potential reversal lower away from the area. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, so what institutions are doing, we can see how with the last reports, we went from having a positive net positioning of plus 1.5k net positions with more longs than shorts. In fact, we had 15.5k longs compared to only 13k shorts, all the way down to now having a negative net positioning, so with more shorts than longs. In fact, institutions currently have 24k shorts compared to only 21k longs. So clearly they are moving now to the bearish side of the NZDUSD. Now, this increases the probabilities that if we get the creation of this W, we have a good probability of seeing a move lower. So if we get a creation of this W formation, how we could be approaching this potential move to the downside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential move lower for the completion of the W formation at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll over here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the program you open an account with them, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment the time to join with the current offer is almost expiring, and directly from here there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So I definitely suggest to go and check it out, as the time to join before everything expires and goes back to normal is almost finished. The link is also in the description at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.